Isaac, higher dollar demand, obviously it's the end of the month, a lot of importers coming into the market. What bearing is that going to have on a shilling that we've seen recover significantly?
Okay, there's a lot of demand for the dollar, but there's also indication that there are quite a number of inflows that are expected, especially from key exports of tea, coffee, and also remittances. So there might be some offsetting of sorts, and you might just see the shilling stabilizing at the levels where it is.
There are reports of these unofficial flows, the receipts that cannot be accounted for. What do you know of that?
Well, it's a bit difficult to, put a finger and say exactly what is going on, because on one side, the official position is that there are certain transactions, foreign transactions that normally are not reported in detail by commercial banks, and they end up being recorded as errors and omissions. But then there's also another theory that, there's a lot of money or liquidity that has been finding its way into the economy from unexplained sources. So I really wouldn't be able to comment and say that, it's either that unexplained liquidity or the official position. But I think the figure is definitely something, that cannot be ignored. 200, I think, and 16 billion shillings is not something, it's
right.
Close to trying to cover an elephant with a handkerchief. It's very, very difficult.
All right, what's happening on the debt markets? Because obviously a stronger shilling should introduce an element of confidence for those wanting fixed income securities. But as we know, rates have been very high and the yields have also been high. Has that abated?
No, it hasn't. And I think it's important to note that about 85% of demand for government paper comes from commercial banks. And at a time when you're looking at interbank rates trending in the 30s range, and treasury bills just around 15-16%. I think banks are seeing themselves, in a better position, lending amongst themselves in the interbank market at those high rates, as opposed to, going into 3-month paper or 6-month paper. So I think as long as the money market is going to remain very tight, with the interbank rates where they are, then we are not likely to see a lot of subscription in the treasury bill side. But I think institutional investors are still, by and large, taking a lot of fixed income.
I mean, obviously, we're waiting for the CBK to take added action at its forthcoming MPC. Are we going to see decisive, aggressive action like they did before? Is it a hawkish or a dovish MPC meeting this time around?
There's still a likelihood of tightening, because I think all the indicators, if you look at all the indicators currently, especially with the aim of stabilizing the shilling and getting to a point where we actually see inflation easing and coming down, then I think the monetary policy stance is still going to be tight. So, but I really don't expect it to be as substantial and, of a high magnitude like what we saw last time. Probably from now, we'll go to the usual, quarter basis points, or 25 basis points to 50 basis points, just the usual range, not necessarily a very big leap from where we are.
Let's head over to the equity side of the market. A slew of results coming through. CFC Stanbic profits up 58%, an increase in their pre-tax profits. What do you make of that?
I think they had a very, very good third quarter. They were able to contain their costs very, very well, by the way, because I think their costs only went up by 1% overall, and they were able to grow their loan book quite aggressively. So I think by and large, they've done very well given the circumstances, and also maintaining, managing to control their net exposure to non-performing loans. So I think CFC, they're still going to do well, I think, in the current quarter.
How do they compare to a mid-tier bank like NIC Bank? Their profits also up for the third quarter?
They also seem to have gotten their act together. I think one would also want to bear in mind that they operate in more or less niche markets compared to the bigger players like the likes of KCB, the likes of Equity Bank, who are more or less on the retail side. So I think if you look at their customers, so to speak, they are pretty much in a good shape. So one would expect them to continue performing well even in the current quarter. I
mean, they have already spoken about what they see as impediments to their growth and earnings in the next year. Obviously, it's continually high inflation. It's going to have an impact on their loan book and their ability to manage the costs on their lending. So they're looking to an expansion into Uganda. But Uganda's also had inflationary issues, forex issues. Where's the wisdom in that?
It's going to be difficult, I think. It's definitely going to be difficult because the results you've seen so far are also coming from a period when, inflation wasn't very, very high. Interest rates had not hit the levels that you're seeing currently. So with the increase in best lending rates coming through and the impact that that is likely to have on borrowers, I think, it would be very, very challenging to see how things are going to pan out. But the great expectation is basically managing their risks in terms of managing defaults, because again, also, most of their lenders are likely to be facing difficult times given the liquidity circumstances, facing them, and also the weakening economy. So it's a bit of a difficult balancing act moving forward.